And welcome everybody to our weekly update for the Property Management Mastermind Group, the NARPM discussion group. Today's guest, I have Matthew Whitaker, co-host, and DD Zhou Lee. And I probably butchered that name, so you're gonna have to come back and tell us all the good stuff. DD was our rising star at the Property Management Mastermind Conference. And she totally deserved that award. It was a stellar, well-chosen, hard-fought award to give that away to her, and I'm proud of her for earning that. She should be proud to display that all over her website, all over marketing, all that good stuff. And look forward to having her back at the Mastermind Conference in March of 2021 if they ever open up Las Vegas again. So
yeah.
Without further, DD,
I already registered for that.
I actually didn't register because I wanted to win that award. So
well, we're not sure if we're going to let you back. We're not quite sure if we're going to let you back in, Matt, but we'll talk about that offline. So DD, give us a few minutes and tell us about yourself.
Well, I am the broker owner for Skyline Properties Group, which is a property management company based out of Woodstock, Georgia. We're about 40 minutes north of the airport. And then I have an office in Woodstock, also another office in Fayetteville, which is about another 30 minutes south of the airport. So we cover everything in between. We manage about 300 single-family homes and 6,000 HOA units.
So that's great to talk about, because the single-family homes and then diving into the HOA stuff, there's been a lot of, I guess, Facebook activity and external activity for property managers like us three to dive into the association game. Yeah. I did this a couple of years ago, about 4 or 5 years ago. I did this. Got into it, got into 2 accounts, and just really it wasn't my thing. So I decided just to focus on single family homes. But now we're seeing more property managers go down that road because of the continuity. It's like almost recession proof, right? Yep. And so that's an interesting topic. Now let's talk about the single family home game for now, and we can talk about the associations later on. Everyone's more worried about the COVID update. So assuming the associations are fine because they're still paying your management fees, let's talk about your residential single-family home tenants. How did your April turn out for you?
So we're right, as of today, we're right below 10% in delinquency. Our average was about between 6 to 7. So we're minus 3 points there, which is not bad. Okay. Our leasing activities have not changed very much. Our new management accounts have decreased. So right about this time last April, we had 7 new accounts sign up, and so far we only have 2. Okay.
So then another interesting topic, I was talking to Tracy Strike today, and we're talking about the delta, right? You mentioned 10%. Okay, so the first thing we ask is how many of those are habitual, normal offenders? Like they always pay late, they always pay their late fees. So let's say out of that 10%, you had 5% of those or 7% of those. Yeah. Was habitually folks that you know about every month. Matt, you're shaking your head. So you might have only, okay, so you really have a delta of 5% new people that normally, would pay that didn't pay. So the doom and gloom of a 30%, 50% definitely is not happening in your market. Matt, so give us an update now that we haven't talked for a week or so. Give us an update on your side, because you're in several markets in several different states. Kind of give us a rundown of where you are on the rent collection side for the month of April.
Yeah, we found, just like DD, that people are still paying rent, which I was surprised. I mean, I was a doom and gloomer. I was that 30 to 50% person probably about 3 weeks ago, but people are paying rent. We're down about 5 or 6% in terms of residents that are late that over normally what are late now. That data is through today. Much like DD though, homes are still leasing. So we're right on our 12-month average in terms of number of homes leasing. People are still moving out. So if people are leasing homes, they're also willing to leave homes and go lease other homes. And exactly like DD, we're down significantly in terms of number of management agreements signed. But I tend to think that that's just like this big pressure that's going to build up. And at some point, people are going to turn that loose. And I actually think it's even going to be better or bigger than what we normally would have had, because I think there's going to be people that had homes on the market that are now going to rent their homes, people that couldn't sell them, people that maybe were going to sell their house. They were rental clients and they're going to come back to us. So I just think we're really early in this kind of COVID-19 game, in my opinion.
Yeah, so it makes me feel good that we got through April. They're talking about May being another story, but I don't know. I mean, I think we might be doom and gloom for May. I think we will have an okay May. I mean, I think it's going to be very similar to April. That's my own crystal ball crazy prediction, that I think May will be okay, because I think a lot of the people that we work with, tenants and owners, they want the normalcy. You know, they don't want to be chased. They want to pay their rent. They want to do the right thing. They realize that this is just like a very temporary potential thing. And so I think May will actually be a little bit better than April. I don't want to jinx myself in saying something too much there, but I do think we're going to be in a good position. DD, what are your thoughts?
Brad, do you think the stimulus checks will actually help people out? Is that one of the reasons? Yeah,
Matt and I've been talking a lot about that. Matt, give us a couple comments on what your team has been saying.
Yeah, I mean, I looked at the residents that are late that reached out, because we've got proactive and reached out to them. 75% of our residents had a zero balance. So they're people that are paying, wanting to pay. They're good residents, and so you've got the stimulus checks that are going to hit. And I just saw an article where they're actually thinking that may hit earlier than expected. So that'll be really good news. The other thing, and this is true in Alabama, so I'm sure it's starting to happen in some other states, is the extra $600 on top of unemployment that our residents are going to be getting. So if they have been affected by COVID, whether that's furloughed, lost hours, lost job, they're going to be getting an extra $600. So I can see a place where somebody could actually be making more money, especially in states like Alabama, Georgia, Tennessee, because you have states like New York that are part of this, and they just did it similar across all markets, that you could be making more money than you had in the past, and you might actually have more cash. So I actually think May and June are going to be good months. Now, I am very bullish on the next 2 months, but very bearish on anything past that, because I think what's going to happen is, not to jump too far ahead, but I really think that this is going to wear on the economy, and the government's going to want to pull back some. And so who's going to be left kind of over the next, let's call it 90 days out? What's going to happen then? I think that's where people in our industry need to be preparing for, what's going to happen when people still don't have their jobs. People still aren't going to restaurants. They're not going to movie theaters. They're not going to ballparks. They're not going to malls, and all these jobs kind of get extended out. Because I think the mindset right now is that this is going to be over with by a certain time. I just read where Bill Gates says we're not going to be back to normal until fall of 2021. And, but until we have testing, consistent testing, or until we have a vaccine, which neither one of those are even close to coming, people are not going to get into crowds. Like we were just talking before we came on about my wife's business, who's in the wedding business. And that is a crowd business, right? Like you invite a crowd to your wedding. People are not going to go to weddings for the rest of the year. I don't see a time when people will, I just don't see a scenario where people will feel comfortable getting into crowds. So that's going to affect our residents' jobs. So we need to be thinking as business owners out into the future. And of course, the stimulus package should help us with some of that loss.
Yeah. The world is changing for sure. So the results of RentWorks, and then we have to talk about the SBA stuff. We have to talk about the PPP. But what I want to talk about is the RentWorks side. So in RentWorks San Antonio, we had right at a 94, 95% rent collection rate, 5 to 6% delinquency. And then I asked the question, how many of those are repeat offenders? Strong majority of those were repeat offenders, with only a minor amount, like 1 or 2% of actual new cases. So very similar to what DD said. So we're working with those folks, and we're trying to get the rent collected. We don't have a lot of recourse.
Who are your residents? Are they mostly, I know there's a lot of military there, so obviously they didn't lose their job. Who else are generally your residents in San Antonio?
Yeah, very strong presence in the military. I mean, San Antonio is Military City, USA. We have 3 military installations. And so that generates a lot of in-place folks. Now, there's been a moratorium on what they call PCS, is permanent change of station. So a lot of the military folks have been like frozen. So they stick them to where they are. You're staying at Fort Sam, you're staying at Randolph Air Force Base. They're not moving them. Like this is almost getting to be the prime time permanent change of station season. And so we're seeing a lot of the folks stay in place. A lot of leases are getting extended, as far as, I need a 60, 90, 120-day extension. And we're being very good, and we're extending those, not charging renewal fees and stuff like that, to where we know it potentially is temporary. So that's the demographic of about half of our tenants. And the other side, it's just a mixed bag of, everybody else that everybody in the U.S. is going to have. But again, a strong section of that, I don't really have a percentage of it, is with active duty military. So good news, you were talking pre-show. DD, tell us about what's going on with your PPP loan through the SBA.
Yes, good news. So literally about 30 minutes ago, got an email from my banker saying that my PPP loan was approved by the bank. And then they're submitting that to the SBA to be assigned a number, forgot what it's called. You probably know the terminology. But what my bank is doing, and I'm going to give him a plug, Eric Ryan, who's my commercial banker, a great friend of mine with Renaissance Bank, what they're doing is incredible. They are extending, it's pretty much like a credit to their existing clients. So once it's approved with them, they are going to go ahead and fund us the money next week, even before SBA funds them. So it's just an incredible thing they're doing. I know they're working overtime, working through nights, probably through this weekend to get as many applications in as possible for small business owners. And, people say there are a lot of unsung heroes right now in this time. And commercial bankers right now are unsung heroes because they are overworking themselves, not just Renaissance Bank, but commercial bankers everywhere.
I love the fact that they're going out on a limb and they're extending that potential offer because, Mnuchin has come out and said they're going to, the money's going to be there, right? That's kind of his underlying intent, his underlying theme. The money's going to be there. The banks are like, whoa, we don't want to be left hanging, holding the bag if we fund the loan for DD, and then the SBA says, oh, by the way, you didn't have a form signed, so we're not going to reimburse you. That's what the banks are all freaking out about, and I don't blame them one bit because
it's a lot of money.
Yeah.
It's a lot of money. Yeah. And the loan is essentially a 1% loan. So if they screw it up, they're only getting 1% on this money. So it's not. And the other thing I've heard is that Mnuchin has said that they're trying to get another $250 billion on top of the original 349 or 350. So you're talking about it now, a $600 billion fund that's out there. So just incredible amounts of money. But I don't want to wait to the next 250. I want the first piece. Everybody else can have the next 250, but I want to make sure that mine comes out of the first piece of that.
Interesting conversation I had just a couple of days ago. I was out at the golf course driving range.
Oh, and shocker.
Yeah, exactly, right? Hitting golf balls. I was talking to one of the business owners, and he runs a big business, really cool business where they do all the grocery stores, pet supplies for the entire, company of a certain grocery store chain. I don't want to mention because that might narrow him down. But the point is, I was talking about the loans. I said, hey, man, did you go get in line for the payroll protection program? And he's like, no, we don't need it. And so we had an interesting debate. I'm like, it may not be about need. It might be about the fact that you can borrow this money, expand, hire more, do good things with it to help the economy. That's kind of the underlying intent. So it almost brings up a philosophical difference. If he doesn't need the money, should he go get it? Matthew, what's your take?
Yeah, no, I have a friend that is in the kind of wealth management business that decided not to go get the loan. And he said, this is definitely going to affect our business. We're going to lose some money, but he just felt morally obligated not to go get the money, that there were people out there that needed it more. So, I mean, people are taking different approaches, and we certainly, one of the things about us in the property management business, if getting back to what's going to happen 90 days plus out there, we don't even know what we don't know at this point. So I think it's kind of dangerous to assume that what we're seeing one and a half weeks into April is just going to be what we're going to deal with for the rest of this COVID-19. I mean, if you have Bill Gates saying this is going to last another 18 months, you're going to have to kind of pack the war chest full and make sure that you're preparing yourself for a long battle with collections and potentially, who says they're not going to defer late fees? I mean, we're giving up almost $25,000 a month in late fees for 4 months. That's $100,000. Well, who's to say they're not going to extend that another 4 months and it's going to cost me another $100,000? I mean, that's a reasonable possibility.
A very good point. So, I mean, we are losing, I think, around $5,000 a month in late fees that are typically there. DD, you're probably losing a big chunk of those as well. What do you got on that?
Well, so my business model is a little bit differently. We don't keep the late fee, so it's not hitting my bottom line very much. But I fully agree. It's basically like free money, right? So why not go get it? Number two, I agree with Brad, is that the money, even if you're in a business where you don't think you need the money, take it, use it for the payroll and for what is intended for rent, utilities, and then use the extra money left over to go hire someone else or do something for the community. At least it's, you know what your local community needs, right? But whatever it is you do, it's going to go back to your local community. So why not take that federal money and, you know, use yourself as a vehicle to get help out to those that you know, right?
Mm-hmm. Yeah.
But absolutely, I mean, if the money's there, even if you don't think you need it now, get it.
Go get it. Yeah, no, I agree with DD. I think helping the community is hiring people so that they have money to go to spend money in the community. I mean, what a better way, you know, we can employ people that can go out and spend money to kind of keep the economy going, which is the whole idea of the PPP loan, is so that business owners like us. So we've actually hired since coronavirus pandemonium, we've actually hired 2 people. So we have not laid off anybody. We actually hired a COO who started last week and hired a new property manager. So we're still trying to add team members, and we just see this as also an opportunity. Think about the talent that's about to be out there. I mean, if we have some of this money that we can go attract some of this talent to our businesses, you know, you have, I think it was like 10 million, 15 million people that applied for unemployment in the last 3 weeks. I mean, there's bound to be some really good fill in the blanks, whatever you need there to go find and add them to the team. Some all-stars.
Can I add on to that?
Please.
I think along with what Matthew said, there's going to be growth coming to the property management industry. Right now is the best time for companies to ramp up on their business development side. You know, if you need to hire, you know, get help with business development, right? Improve your process or get additional team members. Right now is the time to do that so that they're well trained and you're ready to roll it out when the calls come in, because they're going to come in. I mean, I went through the recession last time. It happened in 2009, 2010, and where our industry is now is because of that recession. So we got to be ready for all that growth. I mean, I was just starting in property management then. It was just me. I had 2 little kids running the business all on my own and still signing 8 doors a week. That was how much business that was coming in. I mean, literally during that time, you put out a sign that you are a property manager and people would call you. And I think it's going to be like that again. And
that's way better than anything Matt has ever done. So he definitely deserved that award from the Property Management Mastermind.
I mean, don't you guys agree?
I haven't personally signed 8 in a year. I'm not a salesperson, so.
I agree with you, Didi, and that's amazing. I didn't realize you were around that long, because what I tell people is, you know, I was a realtor back then during that recession, so I would have loved to have all kinds of money to be ready for this. As far as buying homes, there's an opportunity to buy more assets, but we have to look at that as well. But I totally agree with you as far as the opportunity to build the management side, to add more doors. This is going to scare the bejesus out of the self-managing individual property owner, do-it-yourself landlord. It's going to scare the crap out of them. They're going to be running towards property managers saying, please help me. You know, I made a mistake. You know, please help me. Kind of like every time Matthew and I get off a call, he starts running to me and say, please, Brad, please be my friend. I'm like, nope, not going to do it, Matt.
Not yet. No, I agree with that. I mean, one of the things about being a self-manager is when everybody's paying rent, it's easy, right? Well, now's the time where people are, I'm telling you, I think this is going to be a prolonged time where not everybody's going to stop paying rent, but it's going to be consistent collection issues for some period of time. And so they're going to be like, get me out of this. It was fine when they were sending me the money, but I do not want to be a part of this anymore, collecting and making phone calls.
what have you guys heard about the owners and talking to their lenders? Because the lenders are looking at the owner's loan as a secondary non-primary resident loan. I've heard feedback where the lenders are basically telling them to pound sand, pay me. They're not giving abatements, they're not giving forbearances. What have you guys heard? So I don't want to start rumors, but I'm just curious, what are the owners telling you about them talking to their lenders on a rental property?
Yeah, well, I am an owner. I have not reached out to my bank yet, but it's just shocking to me that they're not willing to at least work with them to make sure that we don't get into a 2008, 2009 recession. But it's interesting because banks are actually, I was reading something recently that said banks are actually in a better position. The banks were kind of the problem back then, but now banks are much more well-funded. So maybe they're telling some people, especially investors, hey, stick it. We've got plenty of money to account for your losses, and we're used to selling foreclosures these days. I do think institutions will act fast though, because I think they know what they need to do to ramp up fast. In the past, 07, 08, 09, it took them forever to ramp up and start selling foreclosures. And I think now they're going to act more swiftly so that they don't have a glut kind of clog up the system.
I know
DD,
some of my owners who have their mortgages through smaller private lenders are being told to pound sand, but the larger institutional banks, some of them, like, you just hit a button and you could defer your mortgage payment, so it just depends. But I've heard both.
That's scary too, because that's going to reflect on those banks that aren't willing to play ball.
Yeah.
And really a deferment is all they're doing is they're taking, okay, you don't have to make payment number 247. We'll just tack that payment onto the very end, later on. So it's just kind of like they're going to get you one way or the other. They might charge you fees. They'll probably charge you something for that. I don't know. But let's talk a little bit about, your history, DD. You have connections still in overseas in China.
Mm-hmm.
I think some people are going to be curious about that. I'm sure you get asked all the time, do you have any connections over there? Do you have any family over there, et cetera? Tell us what you know.
Yes, it's really, really interesting. If you want to kind of get like a peek into the future, right? You see what China, where they are now versus in the beginning, but keep some things in mind. It's a communist country. So it's a lot easier for the government to say, hey, no one go outside and everyone will obey, right? Instead of like here where we're all independent, freedom, seekers. It's going to take us longer, actually. The one thing that brought us to where we are as a country is the one thing that is keeping it, like, making this drag out is because so many people are here and like, no, I'm not going to listen to what the government's telling me to do. But there, it just happened a lot quicker. Like, as soon as the government said, all right, we're quarantined, people just stopped going out. So that started about, I think, almost the end of January. And towards the end of February, things were starting to open, like schools and jobs, like people were starting to go to work. Some cities are still kind of not fully open yet, but now almost everything's reopened. In March, I think all the restaurants, everything's reopened, but people are still very skittish on a social level. Like, when they go to restaurants, they're still sitting far away from each other. They're still practicing social distancing, which is interesting. And people actually embrace the whole virtual, remote working environment. So I have friends whose companies kept that, encourage people now to work from home a couple days a week, just to kind of still keep the social distancing going. It's interesting to watch. And the economic impact, I think you can't trust what the news is putting out from China on that. So it's really hard to tell how much of an impact it's having on them. But I'm definitely watching. Going back to you were talking about self-managed landlords. I was actually on a Zoom conference call with about 24 landlords who are all Chinese, and they're all self-managing. They have properties in Georgia, and they're panicking. They were like panicking because they had no idea how to handle this. They relied on realtors to find them tenants, and then they self-manage, and now they have like no guidance. So I actually had the opportunity to speak to 24 of them and kind of help them navigate through the PPP loans and how to handle tenants who are not paying, what conversations to have with them. And I'm hoping, to show them that, hey, this is what professional property managers do. We're in this industry, we breathe, the industry, we know how to handle, we're prepared. So another great reason for why self-managing landlords should start thinking, hey, maybe I'm not cut out for this, right? But that was a great point you made earlier on that.
Yeah, I think Dee Dee brings up a great point about the industry and the fact, Brad, you've got this kind of mastermind concept. And one of the things, I'm part of a mastermind. One of the things that's been great about this is being able to have the relationships with Dee Dee and Brad and people that I'm very close to, being able to text them, ask questions. What are you doing about this? Send me your form for this. Show me your language for this. And I'll tell you, it's made wading through this way easier because you can kind of crowdsource the information. If people that are out there on their own, managing their own home, who do you call? I mean, I guess you can go to Bigger Pockets and hopefully get some information from them. But boy, it's nice to have professional landlords that have some of the same issues that they're dealing with that we can reach out to.
Dee Dee, on that call, let's be honest. You had to have a little bit of a smile in the back of your head saying, ha, 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 I told you guys, you should have hired me a year ago or 2 years ago or 10 years ago.
Oh, yeah. I rubbed it in.
Yeah, good. Thank you. Okay, perfect.
Good for you, Dee Dee. I would have loved to have a video of that.
Oh, yeah, I have it. It was recorded. It was all in Chinese. I spoke very broken Chinese to these people.
Oh, gosh.
But no, we made it work. We made it work. So anyway, it's an opportunity. I think right now there's so many opportunities out there. And I don't know about you guys, but just this week alone, I had at least 3 people call me and with new business ideas. Like, what do you think about this idea? Thinking about doing this because of the new this new norm that we're all in. So they're forced to be creative. And I just think that's very interesting. Do you guys have any good things happen to you this week? Like, have you heard the similar things?
I'm with you, Dee Dee. That's what we were talking about with my wife. What I was sharing with you before this is going to create all sorts of problems, right? And businesses are created to solve problems. Now, look, we don't think this is going to last the next 10 years, but if you listen to Bill Gates, it's going to last the next 18 months. So what can we do over the next 18 months to solve people's problems that they're going to have that this is going to create, especially in the housing business? I don't know what the answer to that is, but I think there's going to be a lot of money. Somebody's going to solve some big problems, and we're going to be reading about them in the Wall Street Journal thinking, man, I wish I had done that, because I was sitting there talking to Dee Dee and Brad and talking about how big the problems were going to be, and I couldn't figure out what that problem was.
So real quick, let's circle back on one little, PSA, just to make sure everybody out there is listening. Go get that PPP loan, the Payment Protection Program. Get with a lender that can go directly to the SBA somehow. At the end of that whole conversation, you want an SBA loan funding number. And that's what Dee Dee hopefully has secured just this week, to where that money is going to be guaranteed and she's going to be getting that loan. So that's one part. And then also best practice, we talked about this before, I want to bring it up one more time. Set up a separate account with whatever money is generated out of those loans, either through the EIDL program and or the PPP program. Put that into a separate account. Only use it for payroll, only use it for the expenses that are allocated. And so when it comes time to ask for forgiveness, which you're going to need to pull up and print, you can easily submit that paperwork and say, here, this is everything I've done. Now, let me clarify one point on the regs. Maybe you guys can just double check me on this. If you get, for fun, $100 and you spend $75, 75% of that $100 on payroll, up to 100% will be forgiven.
Correct.
Am I reading that? Okay, so I'm reading that correctly. So
yeah,
obviously you can use expenses for like rent and you can pay for other stuff, but if you use it for 75% for at least payroll, they'll forgive you up to 100%. I mean, think of that. That's pretty amazing.
Yeah. Yeah.
Totally agree.
Good.
It's
Well, I
amazing.
appreciate it is, and I'm take advantage of it, and let's get the world back on track and get our businesses expanded, go hire more, create new opportunities, create new businesses, and make good use of it. DD, I want to thank you very much for coming on. Great perspective. Love to see what you're doing there. I'm very curious now. I may have to contact you to say, what were those businesses they're talking about? Because, I'm very intrigued now. And I know you have a very business-oriented mind, and I love talking with you. So, Matt, any parting comments?
Nope. I just appreciate you having me back on, Brad. I think just like Dee Dee was saying, people need to start, now that we're settled into this is kind of our new normal, start thinking opportunistically, solve big problems.
Dee Dee, any parting comments for the team?
I just appreciate, the time and giving me this chance to talk to everybody. Thank you guys so much for the
Great.
insights as well.
Glad to have you on, and I'm going to end this, and we'll talk soon, gang. All right, take care.
Thank you.